All right, everyone. So we're rocking now. We're going to talk a little bit today about option contracts, prices, and how I monitor and get into my option entries. Let's get started off. So today we're going to go over Friday. Or what we were looking at Friday was two main things. We got our supply area where we're going to get bought up, and we got our demand area where we are going to get dropped down. So I trade off of the 2 minute, 1 day 2 minute. Go up here on Thinkorswim, favorites, customize list. You can add the 1 minute by 2 minute. As you can see, we had a steady uptrend all day long, mostly until about 7:40, and then continued around 9:50 to 11:56 PST. Now, what we were looking through this was our red area we want to sell, green area we want to buy. So if this crossed our red threshold where we had supply and demand marked, we wanted to buy. If we would have bought at this level, we could have held up to our second level and we could have sold around our take profit area of 320.89, since that was the next resistance level. If you have big cojones, you could have held through the chop like we talked about last week, if you remember. And you see this never broke support, actually never went below completely and made a lower low. So you could have bought again at this resistance that was set here and turned into support. You can see how that happens, and then held. Let's go over a little bit of how I see my option entries and what I look for while taking them, okay? Give me 1 second to change this up. So when we go over here, we're gonna go over to our second screen here, and we're gonna go to our trade tab, okay? And then our call volume list, or our call strike list, date list. You ask to buy, right? So we're gonna go to the ask. Send to maroon is what I have mine mapped to, and send to purple. Okay, so what that's gonna do, if we go back to our other screen here, it's gonna go back to our options chart, and this is actually looking at the volatility of an exact price of what we have our options at. Now, when we're looking at our whole Friday option here, we're seeing that our 50-day moving average, which is here, this green line, we want to respect that above it. Buy at the 50. We buy here and we don't sell until it either crosses, which would be here, right where it crossed, right at the 1.1. We would have bought at 0.51. That's a 50% increase of whatever you invested, and you could have bought again when it crossed the 50 and held all the way through the day. So that would have been 1.07 to 1 or 2.16. So right there, you would have 2.5 extra money for the day. Anyways, better said than done. That's not going to happen. We all know it. You get in where you can, you hold to your next level, and then you get out. But we want to respect this 50 the best we can. As soon as it crosses this 50, we're in. We're holding. Don't be scared. You're gonna have drops, and if it drops all the way from where you bought in at around 0.52, you're still gonna get 20 cents out of it. Say you have 10 contracts, that's $200. That's all you need in a day. This isn't a get rich quick scheme. This is a longevity. You need to think about it like that. That's really what I look for entries. So if we're crossing into our green supply zone, we're buying. We're buying. We're buying up. We're buying up. Okay? And we're over the 50. Why wouldn't you be buying? This is easy stuff, guys, and this is all it really takes to be in the game. It's not overly complex. You need to think of it from easy perspective, realistic perspective. Take the position, wait for the signal, right? Take our position at the 50. Here's what you would have seen if you took the position at the 50, right? Here's what you would have seen. Take the position right at the 50. Candle goes up. Candle keeps going up. Oh, do I sell? Do I buy? Keep looking at the 50. Keep looking at the 50. Oh, I'm getting... No. You keep looking at the 50 right here. We keep going, we keep going, we keep going. Keep looking at the 50. Bounces, does not open or close below. There's no close below. Why would you sell? Keep looking at the 50. Close below, we could have sold. Right? You would have been down a little bit more money, but you respected it, right? It's going back up. You see our price coming back up from the chop here. Price spikes at our support. Price spikes at our support previously that was established. And these are going to vary a little bit because they're contract specific. Spike, gone. Above the 50, you're entering. Let's say at this candle, 1.11, you enter. You're holding, you're holding, you're holding. You're holding. Never touch the 50. You're holding. Touch the 50. 1.88, you're out. That is 70 cents. That's $70 on each contract. $700 if you had 10 contracts. $7,000, 100 contracts. Why are we not holding this? Simplify, adapt, overcome. It's that easy, guys. Hope to see you on the next video. Peace out.